Welcome to our Australian dollar to US dollar analysis report covering the week of September 22nd to 27th, 2025. I'm your host from Sept, bringing you the most comprehensive forex analysis to help inform your trading decisions. Today, we'll examine the Australian dollar's performance against the US dollar, analyzing key technical levels, fundamental drivers, and providing actionable trading recommendations. Let's start with the executive summary. The Australian dollar to US dollar closed at 0.6547, down 0.73% for the week, continuing its bearish momentum. Several key factors influenced this performance: weak Australian employment data showing a loss of 5.4k jobs versus an expected gain of 22k, Australian inflation rising to 3%, keeping the RBA cautious, and persistent USD strength due to hawkish Fed commentary. Technical indicators are showing neutral readings, but the short-term outlook remains bearish with a target of 0.6450, while the medium-term outlook depends on whether the pair can break above the critical 0.6713 resistance level. Looking at the market overview, the Australian dollar to US dollar traded within a daily range of 0.6521 to 0.6552 with moderate volume of 61.14k ticks. The weekly decline of 0.73% contrasts with the monthly gain of 0.66%, indicating short-term weakness within a more neutral medium-term context. Performance metrics show mixed results across different timeframes: positive on a daily basis, plus 0.10%, monthly, plus 0.66%, 6-month, plus 4.11%, and year-to-date, plus 5.83% basis, but negative on weekly, minus 0.73%, and yearly, minus 4.94% timeframes. This mixed performance reflects the currency pair's struggle to establish a clear directional bias. From a technical perspective, the short-term outlook for Australian dollar to US dollar remains bearish. The pair is trading below the critical 55-day EMA at 0.6545, which now serves as immediate resistance. Action Forex Analysis indicates a downside target of 0.6413, while Daily Forex recommends selling with a take profit at 0.6450. The medium-term picture shows the downtrend from the 2021 high of 0.8006 remains intact, with the rebound from 0.5913 viewed as a corrective move. However, bullish convergence on the weekly MACD suggests potential for reversal if the pair can break above the key Fibonacci resistance at 0.6713. On the fundamental side, several key events impacted Australian dollar to US dollar during the week. The Australian employment report on September 18 showed a disappointing loss of 5.4k jobs, with full-time employment down by 40.9k. Australian inflation data released on September 25 came in higher than expected at 3%, keeping the RBA in a cautious stance. Meanwhile, multiple Fed officials expressed resistance to rate cuts due to persistent inflation concerns, supporting USD strength. Looking at central bank expectations, the RBA is likely to maintain rates through Q4 2025, while the Fed's hawkish tone continues to create a rate differential favoring the US dollar. Based on our analysis, here are our trading recommendations. For the short term, 1 to 2 weeks, we suggest a bearish bias with a specific strategy: sell on rallies towards 0.6574, place a stop loss above 0.6627, and target 0.6450 for take profit, giving a risk-reward ratio of 1 minute and 2.1 second. The key trigger is sustained trading below the 55-day EMA at 0.6545. For the medium term, 1 to 3 months, maintain a bearish outlook as long as price stays below 0.6713, targeting the 0.6400 area. However, be prepared for a potential bullish scenario if price breaks above 0.6713 with strong momentum, which could target the 0.6941 structural resistance. Before concluding, let's discuss key risk factors that could impact our analysis. High-impact risks include a potentially hawkish RBA policy decision that could trigger a sharp AUD rally. Medium-impact factors include weaker-than-expected U.S. economic data and positive Chinese economic indicators, both of which could support the Australian dollar. For effective risk management, always place stops at appropriate levels: 0.6700 for bearish views, 0.6450 for bullish views. Maintain a minimum 1 to 2 risk-reward ratio, limit exposure to 2% of trading capital, and wait for price confirmation before entry. Remember, this analysis is for informational purposes only and does not constitute financial advice. Trading Forex carries significant risk, and you should never invest money you cannot afford to lose. Thank you for watching our Australian dollar to US dollar analysis. For more in-depth Forex insights, please subscribe to our channel and visit our website. This is Sept, helping you make informed trading decisions.